We've just had Palantir's Q1 earnings, and since those earnings came out, the stock has gone absolutely crazy. Pre-earnings, we saw a massive increase in the stock of about 8%. Post-earnings, a completely different story. And yesterday, the stock seemingly crashed. And I've seen a lot of people now respond that Palantir is over, rubbish quarter, all of this stuff. I think that's absolutely nonsense. I think Palantir are doing exactly what they need to be doing and what they should be doing. But in today's video, let's dive in deeper to the earnings and my thoughts and the future of Palantir. So let's just get the facts out the way straight away. They beat top line and bottom line. They beat revenue estimates and they beat EPS estimates. And something that we need to remember as well, and actually this is even more impressive, is that Palantir had their own guidance that they of course released the previous quarter. However, the street's guidance, the analyst estimates were actually higher than those of Palantir's. Now, Palantir not only came out this earnings and beat their own guidance, their own estimates, but they also beat those higher estimates from the street. So some main things that we learn from these earnings. Number one, this was their 6th quarter of GAAP profitability. Of course, when they posted their first quarter of GAAP profitability, it was a massive deal and it was a massive win for Palantir and the Palantir community. But moving forward, it's really, really important that we continue to see that pattern, that they continue to trend in the profitability direction. And of course, this should actually grow over time. Now, this particular earnings that we've just seen was very, very exciting because they actually earned $106 million, which was the largest quarter profit in their entire 20-year or so history. And this time, the margin was 17%, which showed an increase from the previous quarter. Why is this important? Well, this indicates higher overall profitability. They are getting more profitable. And just for comparison, the amount of profit that they generated in just a single quarter is now way more than they previously generated in an entire year. So when people say Palantir is over because the stock crashed post-earnings, come on. I don't want to throw too many figures at you, but these things are important and they are bullish. US commercial revenue saw a 40% year-over-year growth and a 14% quarter-over-quarter growth. Their commercial revenue as a whole, so this is their US commercial customers and also their international, the international commercial side as well, grew. It grew by 21% year over year and 5% quarter over quarter. So it is clear that the US commercial side of Palantir is the area that is taking the spotlight right now. But we can't forget as well that Palantir they have a unique business model. They have a dual income stream in the sense that they have their commercial side, which is of course split up into US commercial and international, but then they also have their government side of the business as well. And both the commercial side and the government side saw growth in the revenue. But what we do often see, and we have for the previous few quarters, is that whichever one of these business areas grows less, so, commercial grows more, government grows less slightly for that quarter, people then criticize the area growing slower and they suddenly want to see more growth in that slower area. And then it works the other way. If commercial's growing slower than government, then suddenly the commercial side struggling, they need to push that more. So it seems like whatever happens, a lot of people are not truly happy. However, this quarter, they both did grow. We have a little guy that wants to say hello to everyone. Otto, say hello to the Palantir community. No, bye Otto. And this is one thing out of many, many things that make Palantir such a unique business and so interesting to actually follow, is this whole idea that they have these two income streams. They have these two business areas. This is very, very unique for multiple reasons. You can probably, I'm sure some of you watching this will be able to name another business that has a government revenue and a commercial revenue, but it is quite rare. And why is this so unique and why is this such a strength? Well, it's because in some way it shields Palantir from truly feeling the effects of the macroeconomic situation, such as interest rates. Because they have this defense government side, when interest rates and the macro are really, really tough and really bad and their commercial revenue may be struggling a little bit, they have the government side that can come in and sort of bring that up. And also a lot of businesses not only struggle when interest rates are bad and inflation's bad and things like that, but also when there are geopolitical issues happening in the world. That affects businesses. Why does it? Well, multiple reasons. It affects supply chains, all of these things. I won't dive into all of them. Palantir, they don't see that as much. Actually, Palantir are very in demand when there's geopolitical issues. They closed 87 deals that were worth over $1 million. The previous quarter, they did close slightly more at 103. And then we move on to customer count. Customer count was one of the key pieces of information, the key metrics that I was particularly interested in, and I know a lot of people were. Now, we did hear that customer count grew 42% year over year, with the US commercial customer count growing 69% year over year. So you can already see revenue-wise, customer count-wise, that this US commercial area is really, really driving Palantir at the moment. And then we have to ask, why is that? Well, I think AIP plays into this very heavily, and especially the boot camps as well, but we'll talk about that in just a minute. So why do we care so much about customer count? Why must we see it increasing? It's because this customer count is what eventually drives higher revenue, market share expansion, brand strength, etc., etc. We don't want to be seeing a business not grow the amount of customers that they've got, especially with a company like Palantir that only went public relatively recently. They've not been in the commercial segment for all that long. And with the AI revolution happening, we should definitely expect them to be growing their customer count. And that's exactly what we're seeing. And it also just shows us that they are absolutely following the right strategy and they are doing something right. So AIP Bootcamps, the holy grail of Palantir. People love, love, love AIP Bootcamps. Why? Because simply they are working. Now, this bootcamp strategy, let's just forget about AIP at the moment. This strategy of running bootcamps, running workshops, this is not new. This is not something that Palantir invented. However, before Palantir started running these AIP bootcamps, as far as I believe, they took on more of a traditional sales method. And that wasn't really working very well for them at all. Again, as far as I understand, prior to starting bootcamps, they weren't really converting customers all that well. They had the right solutions, they had very good products, but the sales weren't really happening. Then roll to mid-2023 and they launched AIP, Artificial Intelligence Platform. And this has absolutely changed the game for Palantir. This has been a solution that has got much attention, and for very good reason. You've only got to go and look at the AIP con events and hear the customers that are using AIP talk about it, and you can see how effective it is becoming in the day-to-day run-ins of loads of different businesses across many different sectors. But since the launch of AIP, Palantir have completed bootcamps with over 915 organizations in the US and actually globally as well. These AIP bootcamps are running in Germany, in the UK. They're going global. They are on tour. And in the recent Bloomberg article, we actually learned that they are now running about 5 a day. And I expect this to continue to expand as more and more enterprises get interested in how Palantir can help them. So like I was saying, they pivoted from a more traditional sales method, long sales calls, getting a sales team to actually ring people, talk to people on the phone, communicate with different organizations to see if they were interested. And it wasn't really working. And I think one of the reasons why is because potential customers, they're not always going to understand all of the jargon that needs to be used with Palantir's software. They're not always going to be the most techie people that are answering these phone calls, that are talking to the sales team. And actually, a lot of the time, people just want to see the solution in action. And you got to think as well, the demand is so high now that they would need an absolutely massive sales team. And that's no longer really in need at all because these boot camps are working. This is a solution to the problem that they were having for quite a long time. And because of this success, I do believe that they are hiring a lot more right now, and they are actually hand selecting the best talent. And I believe actually that Karp said he was directly involved with recruiting because, he wants to hand select the best talent to work at this organization. And I believe as this continues to happen, the boot camps will expand and scale even more. I think in the call though, Karp said that they are now making more money than ever before with the same number of employees. What does this tell us? Well, it tells us that the people that they are employing, the talent that they are selecting is the best talent out there. And they are able to get more money worth out of every employee than they ever have before. And we actually know that the top talent want to work at Palantir. They want to work at these innovative organizations that are making real differences. The likes of Tesla, the likes of Palantir, being 2 examples. And I've also read in multiple places that actually getting recruited at Palantir is becoming increasingly more difficult. And the process to actually get a job, land a job at Palantir is very, very difficult. They can be very picky. And also the crazy thing about boot camps, and this is something else that was written in the Bloomberg article, is that what Palantir are now seeing is this ability for AIP bootcamps to actually proliferate. What does that mean? Well, the customers of Palantir are now kind of running their own AIP bootcamps to get their customers on Palantir's software. Why would they even do this, you ask? Well, it's because if their customers are using Palantir as well, it makes it more efficient for them, if that makes sense. So it's a win-win. It's a win for Palantir and it's a win for Palantir's customers. Another massive win that we saw from these earnings is that they ended Q1 with no debt and almost $4 billion in cash. This is an extremely healthy cash position to be in. And of course, not all debt is bad for all companies. There's definitely a time and a place for a company to have a little bit of debt, but I'm not complaining here at all. I was very happy to see this. Net dollar retention came in at 111%. Q4, it came in at 108%, but in Q1 2023, it also was 111%. This means that year over year, net dollar retention has actually been flat, and in past quarters, it has definitely been higher, but 111 is decent. Then we saw this rule of 40 being mentioned. Now, this is something that not everyone is familiar with, and people may not have seen this before. It's basically a financial guidance that is typically used within SaaS companies, software as a service companies. And it basically helps us investors determine whether growth and profitability are or are not sustainable. Now, this rule states that a healthy SaaS company's recurring revenue growth plus its profit, or minus if it's a loss, should add up to at least 40. SaaS companies above 40% are generating profit at a rate that's sustainable, whereas companies below 40% may face cash flow or liquidity issues. So it should be higher than 40%. However, many SaaS companies are not achieving this. We saw that Palantir achieved 57%, which is very, very high. And I think right now, I could be wrong on this, don't quote me on this, but I think right now only CrowdStrike are higher in terms of the rule of 40 than Palantir. But many companies are lower than this. Now thinking about guidance, this is a really, really crucial, important part of any quarter earnings. And it is normally a part that does have one of the biggest effects on how the stock moves post earnings, along with whether they obviously beat or miss expectations. And I'm going to come back to this because I do think that this is a reason that we saw Palantir's stock fall, even though they beat. We'll come back to that. But anyway, they raised their estimates for total revenue, and they also raised their US commercial revenue to a growth rate of 45% instead of 40%. They increased guidance for adjusted income from operations, but they kept the guidance for adjusted free cash flow exactly the same. Something else that a lot of people have seemingly forgotten is that actually Q1, seasonally speaking, does tend to be the slowest quarter. So it's always really important to take these earnings and actually look at them in the entire context. Now let's move on to the call and talk about some highlights that came from that, because there were some very, very bullish statements said to us by Dr. Alex Karp, who of course was wearing his classic white t-shirt. One of the most bullish things that he was speaking about on this call was how he just doesn't see competition. He doesn't really believe that Palantir have any true competitors. And as investors, we love to see that. Of course, there's going to be a time where they probably do have some competition, but it's important that they stay ahead of the competition, and I don't doubt Palantir will do that for a single second. But right now, they're not really seeing any. He said, currently, I don't believe we have competition. We have people trying to be us, but it's going to take a very long time to build a combination of Apollo, Foundry, and AIP. In another statement, he said, I don't believe we have competitors. So I don't believe in the US commercial market we have competition. I don't believe in the US government market we have competition. So he's basically saying that both business segments, the commercial and the government side of Palantir, they're not really seeing any competitors. They are ahead of the game. And then we have to ask, okay, well, what is the competitive edge that Palantir have that other potential competitors just don't have? Well, it's because they have an ontology and they are differentiated. Many companies are now offering AI solutions. They're offering large language models, LLMs. However, what Palantir are doing so well, and the reason that they're standing out so much, is because they are one of the only companies, if not the only companies in the US, that actually allow other companies to properly use LLMs. It's great to have LLMs, but to actually use them to see a real business impact, whole different ballgame. That's where businesses start saving money. That's where businesses start increasing their efficiencies. That's where businesses, when in healthcare, start to see that lives are saved. There's a lot more to say about these earnings, but now I just want to move on to what the stock did and the stock price craziness and movements that we saw. Now, I think that actually this was a really, really good earnings. It could have been better. Of course, any earnings could always be better. They could have beaten revenue estimates and EPS estimates by way more. They could have increased their guidance by so much. Of course they could. You could say this about any company at any given earnings. However, what we did see is exactly what we should have seen, which is the right things are increasing. It was a decent earnings. Palantir investors should be happy. I know I'm happy. Now, like I said earlier on in this video, pre-earnings, we saw a very interesting thing happen. We saw quite a significant run up in the stock price, about 8%, I believe. And I think this was just FOMO. I think this was people trading the stock. I think this was people anticipating that Palantir could do very, very well post earnings in terms of the stock price. So they wanted more. All of these things combined. And you can't blame people for thinking this. When we had the previous earnings, February the 5th, we saw a 40-something% happen to the stock in just a few days after. So if that was anything to go by, given that Palantir were expected to do particularly well, anything could have happened post earnings with the stock. People want to make money. So the stock ran out before earnings. Earnings got posted. It was a good result. You know, they didn't miss. They did very, very well. And then the stock fell and it was down by like 15% yesterday, the day after the earnings, I believe it was, which is quite significant and in my opinion, a complete overreaction. So why did this happen? Well, I think it was a couple of things. I think number one, the stock had run up too much pre-earnings. Palantir needed to post an extremely, extremely positive earnings result in order for this stock price growth to be sustained and then continue to grow even more. And that just didn't happen. They did very well, but you know, they didn't post the most crazy good results ever that we've ever seen. And I think as well that the street and retail just wanted more. They simply wanted more, especially in terms of guidance increases. But this just yet again goes to show us that trying to make too many moves and trying to predict what a stock is going to do during earnings season is really, really tough. It's a very, very manipulated time in the market. And clearly stocks, no matter what their results, can make very unexpected moves. So what am I doing now? Well, my thesis still holds. I'm going to continue to dollar cost average into Palantir. In fact, I added more yesterday, trying to make the most of this opportunity, trying to make the most of this stock price dip. But if you do want to know every single time I buy or sell any positions and you want to join a community that talk every single day, come and join the Patreon. You'll get access to the Discord as well. There are a few spots left right now, but it is a limited number of people so that I can keep this as close-knit, as much of a community that know each other as possible. I'll leave a link for that in the description below. With all that said, let me know in the comments below what you thought of these earnings and what you're doing with Palantir stock right now. Like I said, I'm very happy and very pleased. I thought they did extremely well and I look forward to the next earnings, maybe an S&P 500 inclusion and everything else that Palantir are currently working on. Thank you so much for watching this video and I'll see you in the next one very soon.